So, Tish, we're going to jump to you. Tish, are you there?
Good morning, Sunshine. How are you guys? It's Tish for Stroke and Distant Home Staging.
Oh, hey, how's it going,
you doing?
Tish?
How are y'all? You have a nice holiday and all that good stuff. It's a little bit late now to be asking.
Yes.
All good so far. How about you?
We're doing good. Business is rocking and rolling, and that was kind of why I had a question that I wanted to ask you guys.
Okay.
From a self-employed perspective, you know, a lot of us small sole proprietorship businesses, we tend to plow all of our money back into the business. So then when it comes time to need a loan or, you know, need to buy a new house or things like that, what do we need to do to make sure that our credit, or we have the ability to prove our financial responsibility? In addition to having a good credit rating, you also have to have that debt-to-income ratio thing going on.
Right. You know, and there's two sides to that, right? Number one is cash flow. So the way you manage your cash flow is going to be different than how we qualify you from an income perspective. So What we normally do for self-employed borrowers is you're going to have to be in business for at least 2 years and show in your tax returns your earnings for the past 2 years. Now, your tax returns is not what you say you earned in gross receipts. It's what you actually netted out after expenses. That's what we use to calculate your income off of. Now, there's some certain things we can add back in, for example, depreciation and depletion, etc. But generally speaking, that's what you have to do. You have to take whatever your gross receipts are minus your expenses, comes your net income. That's how we're going to gross your income. That's how we're going to look at your income right there.
Okay,
now, the fact that you put your money back into your business, that's more of a cash flow perspective. We wouldn't really look at anything on the cash flow unless we had a balance, unless we were required to get a balance sheet, and your balance sheet showed that you're in a really negative equity position, then that could be an issue. But generally speaking, we don't see a lot of that.
So it's okay that I don't actually write myself a check every month?
That is correct. That's absolutely fine. We don't, because we're going to look at your tax returns anyways.
Okay, all right. Well, super. That's awesome. Good to know. I know there are a lot of other small business owners out there that might have that same question. God bless you guys. Take care. I hope to see you soon. We'll talk later.
Absolutely, Tish.
Thank you
very
for the
much.
call, Tish.